So welcome everybody. Tonight we're going to be discussing patterns. This is going to be another part of our beginners slash advanced slash whatever you want to call it course series where we develop some of the most fundamental concepts in technical analysis and macroeconomics and everything else under that umbrella. As you guys might already notice, I'm at a little bit of a different setup. I'm actually sitting in a hotel room right now just with my laptop. So this lecture might look a little bit different. It might flow slightly different, and maybe I sound a little bit different as well. So if anything is noticeable like that, I apologize for the change. I'll be back at the setup soon, hopefully next week. We'll see. But yeah, with that being said, I want to just get straight into it. We got Flips here, so I want to see if we can pick his brain on some of these patterns. We got this content updated a little bit for tonight, so let's get right into it, everybody. If you guys want, you can send us a screenshot of you posted in this lecture or whatever you're drinking, eating while you watch. Sometimes kind of fun. So again, this is where we're at in the course series right now. Last week, we talked about trends. The week before that, we talked about indicators, support and resistance, candlesticks. So we've got a lot of knowledge under our belts. If you guys haven't seen the previous lectures, I highly recommend you go and check them out. If you're looking for them, you can just navigate to the Discord, go down to this beginners tab right here. They're all in order for you. You can see also here, the last one where he had flips in it in part 5. That was a good one. And yeah, just to remind everybody, the goal of this course series, I think this is very important. And this is always what I'm trying to focus on, is give everybody a purpose, goal, always a reason to be staying in and viewing all these lectures. Our goal is to create successful traders who can find the highest probability trades and act on those opportunities with confidence. You see traders like Flips and many other people who have came up in this Discord, and you know that it is absolutely true that with a little bit of education, a lot of dedication, you can absolutely become successful in the market. And that's why we perform these lectures and do this content year in and year out. Is we truly believe that it's so important to develop this knowledge with you all. And that's what we're here to do. So happy to have you guys all in here tonight. Before we get started, just want to make a few quick comments that I always make before every lecture. As always, guys, I know what it's like to be in each and every one of your shoes. I know those of you who have heard this before probably think I sound like a broken record, but I know what it's like to know nothing, to know a little bit in the market, to maybe have a little bit of success. Whatever stage you're at, I've probably been there. So I do my best to cater to all people in the market, right? I've been in most people's states, losing a lot of money, gaining a lot of money as a beginner, right? So I know what it's like. So I do my best to cater this content to those individuals. Also, in these lectures, I do my best to pack a lot of information in a short amount of time. So do expect that we're going to cover a lot tonight. I try my best to kind of front load with more beginner or more in detail explanations. That way, later concepts we talk about can be a bit more broad and you can develop the understanding a bit quicker. So that's going to be the general format of the lecture. Is there any questions before we get into the content tonight? And again, guys, if you don't understand anything or any term that I use tonight, feel free to drop a question in the chat. But do keep in mind that everything that I talk about tonight has been indirectly referred to in the previous lectures. So we're going to talk a lot about trends. We're going to talk a lot about support and resistance, all that good stuff. We've had full lectures on all of that. We're going to talk about volume as well, price action, full lectures on all that, hour long. So go back, review those lectures as well, because those will also be very important. It's important to note that technical analysis and making trades in the market, it's not ever just about looking at one thing, right? Maybe if you think about just looking at one reason to get into a trade, that's not enough, right? You have to be having multiple reasons why a trade makes sense to you. And the end all be all is not patterns. It's not candlesticks. It's all of those together, right? So it's looking at price action. It's looking at flow. It's looking at trends, patterns, whatever you might have, right? It's looking at multiple things in confirmation or in conjunction to build a strong thesis, to find probabilities that make your trade more likely to happen and more likely to go in your favor. And that's what we're looking for. And that's all these separate aspects of technical analysis that we review in so much detail. So what time does class end? I'm thinking usually we run a little bit over an hour. So we'll probably be out of here within, I'd say about 10 Eastern. So yeah, if you can't stay that long, feel free to stay as long as you can, and the recording will be available later this week. Oh, we got Lambos in here too. All right, let's get right into it. So obviously last week we talked about trends, so I'm going to skip through this part. But yeah, just to remind you, we talked about how an uptrend consists of higher highs and higher lows. We talked about how trends can act as support and resistance as well. We also talked about how downtrends consist of lower highs and lower lows. So it's the exact opposite. Remember, you got the lower highs and lower lows, and same thing, right? You can also draw a trend line, and usually these trend lines can act as support or resistance. So again, right, we did a whole lecture on that last week. So if you want more information on trends, highly recommend you go check that out. That was a really detailed one where we talked literally for an hour about trends. So let's get right into some patterns, and we're going to start with a little bit of simpler patterns. First, I want to just show you guys this cheat sheet. this is obviously a very simplified cheat sheet, right? Clearly, there's no real candlesticks. It's just some lines. But this can be a really solid reference when you're looking to do some charting and you can't remember what a pattern is kind of supposed to look like. I think this type of cheat sheet really gives a solid general idea of what every pattern should look like. So feel free to take a screenshot of this. If you're on mobile, I'll send a screenshot of this in the Discord after the lecture. So if you can't get a screenshot, no worries, I'll send one out. But yeah, just like the candlesticks cheat sheet that we showed in the candlesticks lecture, I truly think that these types of cheat sheets can be great to just learn to identify these patterns when you're first getting into it. And yeah, so there's a bunch of these cheat sheets on the internet. I personally don't even trade each and every pattern on this specific cheat sheet. However, it's a great reference in my opinion when you're first getting started. So let's talk about one of the simpler patterns, which is going to be a symmetrical triangle. Here you can see it drawn out on a real chart and compared to the simplified version. You can see how we have two converging trend lines, right, which encapsulates lower highs and higher lows. So notice how the price action is consolidating within a tighter and tighter range, right? We have this initial high here. We have this initial low here. Here we set a lower high at this red candlestick. And here we set a higher low at this red kind of pin bar candlestick, right? So this just represents consolidating and tightening price action. If you take a look at the volume, you can also notice how volume drops off as we continue throughout this consolidation, which is usually another good sign, right? You don't want to see very strong distribution volume as we're consolidating in this sort of pattern. And you can kind of see how this plays out, right? So you draw this one trend line here and this uptrend line here, right? So what you'll notice throughout this whole lecture is all of these patterns are very simply described as just a couple trends. And that's why the trends lecture is so important, is because every pattern, all we're doing is just drawing a few trends and slapping a name on it, right? So it's important to note that the name to me is less important. Like, I'm not looking to get you guys to memorize all of these names and be able to recite them back to me and identify them by their name, right? What's more important is understanding the idea, right? And that's something that we continue to try and build in these lectures is, what is a deeper meaning of this pattern? What is going on here? How does this relate to human psychology? Essentially, what I'm looking at in this symmetrical triangle is when I see this type of consolidation in price action, it's telling me that both bears and bulls are becoming in like a stalemate, right? We go back to our tug of war analogy. And if you think about it, the way I would compare this price action to the tug of war analogy is think about both teams pulling pretty much equally, right? One team pulls a little harder one time, the next minute, the other team pulls a little bit harder, right? But for the most part, price is balanced in this area, right? So buyers and sellers have essentially come to accept that this range is pretty balanced, right? This range makes sense as a valuation for the stock. And what we'd be looking for is a break outside of this balance. And this is a concept that you'll see repeated over and over in different types of patterns in different ways. But again, this to me is essentially a neutral zone. It's like where everybody's kind of happy, right? Everybody's like, all right, like we're in this zone. We're pretty okay with the price of the stock at this level. We're happy with not really making too many buys or too many sells in this area. And it's going to be like that, right? So that explains the drop off in volume, the relatively non-volatile price action. Here, this candlestick in specific is when price breaks out of the balance, and that becomes an entry to go long, right? So you can see if we draw this trend line down, notice how price breaks out of the balance here with a decent bull bar closing near its high. Then we get a few candles of acceptance above this balance zone, which is showing a change in balance, right? So here we were balanced, right? Buyers and sellers were pretty equal. All of a sudden, buyers get a burst of strength and they say, okay, we're closing outside of this balance zone with the bull bar closing near its high. Then they retest it with another bullish candle closing near its high, right? So these are two valid entries for this breakout, right? So you'd be looking for this downtrend to break with a daily candle close to the upside, or you can be patient and wait for sellers to try and bring it back below this trend line. And notice how we have this wick to the downside. I'll take these circles off so it's very clear, right? Notice how we have this wick to the downside, indicating that sellers attempted at bringing price lower once we were above this trend line. However, they were unable to do so. So this would be another ideal entry. I'm going to address a few of the questions because I see some has came up. Jay says, is it better to use the wick or body of the candle? I typically find myself using wicks more than bodies, and I think it'd be useful to get Madflip's opinion on this as well, because I know people have different perspectives, but the reasoning why I use wicks is because I typically find that the wicks are where more of the aggressive price action has occurred in the past. And as an options trader, I'm looking for aggressive price action because volatility is my best friend when I'm already in the contract. If I can buy a contract at low volatility and see a volatile move off of a level, that's when I make the most money. So that's typically my reasoning for looking at Wix, kind of biasing my drawing trends and stuff like that towards Wix. That doesn't mean that I only look at Wix for my support and resistance levels. That's not true at all. However, typically when I'm drawing trends, I do look at the Wix because those represent the extremes to me. That is where if we break the extremes, that's when I know something has really changed. Where if I drew the bodies, it's not necessarily always as clear to me. Again, maybe that's a personal preference. Maybe it's more rooted in actual data, which I would argue that it is more rooted in actual data according to my own experience. However, I'm sure that some people would have contradicting opinions, and that's fine. But what do you think, Flips? What do you typically prefer for drawing trend lines? Do you typically look at Wix more,
or what? Trend lines, from what I've seen, that it works for me most of the time. Trend lines, I use Wix. Mm-hmm. Entries, I use full body.
Okay, interesting.
So just like that, look at that trend line break, and the candle the trend line broke was a full body, and then there's your retest. So that's actually 15 minutes if you look at it on the 5 minute. 5 minute, the candle breaks out in a full body. The next candle is a 5 minute close above trend line, and then the next one is a retest of the same trend line, and we move on the 15 minutes. So I put on the chat, if you guys have your computers open in front of you, you can actually go back. I've been watching NVIDIA for a long time, and that's the
here. Yeah, I'll pull it up. I'll pull it up. You said NVIDIA 15 minute.
On the 5 minute 3 days ago.
3 days ago. Okay, right here.
Right there. Look at that. We played that. That's the one that exactly. And then from the bottom you can have it as well. And that's what we played. We played NVIDIA. And that's, if you really zoom in, you can see the breakout, the retest, and the pump.
Mm-hmm.
And that's the exact same pattern that we played 3 days ago in NVIDIA. And that's exactly what you're showing right now.
Yeah, that's essentially the same concept, really. I mean, and I think it's important to notice that you didn't get like a strong breakout candle above the trend initially. And that's just how the market works, right? Every setup isn't going to be, perfect in textbook where you get the perfect breakout, perfect retest, right? Flips, like some things aren't going to be perfect, and you have to accept that and learn to adapt to imperfect conditions.
Yeah, but that's pretty much what we're looking at. But yeah, back to the original question, I draw the lines on the wicks and I enter on the full bodies. Because full body is kind of like telling me which way we're gonna go. And that's the reason I do it that way.
That makes sense. Salem asks, how high should we expect it to go when it breaks out? So if we're just looking at this pattern alone, right? If I just look at this pattern and don't look at any of the price action previously, typically where I draw profit targets based on this type of pattern is I look at where it has pivoted off of the trend line in the past. So you can see here, these two levels are effectively shared, right? It pivoted off of this same horizontal level pretty much twice. So what I would do is I'd have a profit target right around here, because you can see how this candle pivoted right off this level as well as this one. And this also was a pre-market level, but that's not necessarily as important. And then the next profit target I'd probably be looking at is right around this level, which was your previous high of day and also kind of the first wick that created that. And then also finally, it's just going to be your pre-market high there, which is the first candle that formed this symmetrical triangle. And if I had to guess, Flips probably had similar profit targets. I'll remove this one because this wasn't part of it.
I cried that contract. I cried a little bit. I sold. We sold like at 30%, and that sucker went to like 142, 143%.
Yeah, it looks like it. But yeah, guys, notice how price behaved at these profit targets, right? Pre-market high, pre-market low, always good targets to have. That would have been a great one. Obviously, looking in hindsight, it's easy to say so. And then notice how this pivot within the symmetrical triangle behaved, right? We found some sellers there before we really got moving. And then no really resistance at this area, but still a logical place to take some contracts off, considering we saw a significant amount of sellers here in the past. All right, we got a few more questions. Would that also be a climactic buy pattern if you're watching a 20 MA? I'm not familiar with that pattern. But I would assume that price would break above the 20 MA somewhere around here, and that would probably be a bullish indication. Can you really ever tell if this setup is bullish or bearish? That is a very interesting question. And it's important to keep in mind that there's no one indication, even from price action alone, that will tell you if something is more bullish or say if it is 100% bullish or 100% bearish. But typically I assign probabilities to specific patterns. So for example, if we had, for example, this symmetrical triangle, which looks like it happened to be consolidating over some previous highs, right? Let's see, right here. Right. So, for example, this particular consolidation, I would assign a little bit more of a bullish probability to.
Are you talking? Because I can't hear you.
You can't hear me?
Okay, now I can. There you go.
Okay. Yeah. So typically I would assign more of a bullish probability or a bullish sentiment to this specific pattern, considering we had made it above this key resistance level here. If we zoom in on the 5-minute, we're still consolidating pretty clearly above this level. We had broken above the previous day's highs, right? So again, notice how there's multiple different things that I'm looking at, right? I'm not just looking at this specific symmetrical triangle. And I know Flips is doing the same thing, right? He's not just looking at 5-minute levels. He's got his daily levels, his hourly levels. He looks at the hourly chart, all that good stuff to develop his sentiment. Yeah, Flips. Oh, Tyler says we were following Flips' call today, but price weren't lining up with what he was calling out. I would say if that was the case and you're not on live data, that's going to be a problem. You got to be on live data if you're going to trade, but you don't have to pay for live data on every software. But yeah, that's something that we can discuss more privately.
Yeah, he said because he lives in Canada, maybe he doesn't have. He just
okay, that will make it a little bit more difficult. Yeah, that's something that we can discuss offline
later,
Tyler, and we can work to sort that out with you. So cool. So that is how we would define our entries on this specific pattern, right? So that's great. But the most important part of every trade is going to be your stop loss, right? And there's multiple ways to define a stop loss. But obviously profit is important, but even more important is what is your risk going to be defined as? In this case, you got to define your risk in some way, right? And there's multiple ways to do it. In this case, I defined my risk right at this previous pivot. Notice how this line that I drew here also corresponds with this pivot in this area. So clearly there has been some sellers in this area in the past. And now that we have broken above this level, we should expect buyers to step in at this area, right? So this is a relatively logical stop loss. Another stop loss you can look for on this pattern is a break below this trend. So if the candlestick here closes below this trend line, that's another place where you can stop out on. Do you have any other comments on a stop loss on a pattern like?
No, you got to explain. Somebody asked, what is the difference between something about the wick and then the full body? If you look at the pattern, who asked that? Somebody asked that.
Oh yeah, I forgot to tell you that. Yeah. We'll look at
what does guts. What does Flip means about entry on a full body?
Are you just talking about like a closed candle, Flips? Like
correct.
Full body, like
a full body candle, a closed candle above our the broke out of the testing line. So you can go back to your charts.
Yeah.
Everybody see that? Look at that. Look at that entry. It was a full body that broke out on the top. You can enter there, and then your stop loss will be below the full body.
Yep.
So
below this low here.
Correct. Yeah, that will be your stop loss.
That's another stop. Yep.
And then you can enter there, or you can enter on the retest. Which is what we did today with Tesla. We can talk about that later, but that's exactly what we did with Tesla. The breakout, the retest, the entry, and then we went from there.
Yep. And yeah, just to clarify, Flips, when he says full body, is looking at closed candlesticks, which is the only thing you should be trading breakouts with. You need to see a candle close above your level to have any form of confirmation that this candle or this pattern is working in your favor, right? Without a candlestick close, you really don't have any information. So it's very, very important to keep that in mind. Cool. All right, let's see. Cade says, would those circled candles also be an example of a 1, 2, 3 pattern? Is that I'd have to look.
I don't know what that
into
is.
That. I've seen those patterns before. There's like 2, 1, 2, 2, 2, 3, all that stuff. but I don't know them really or trade them. So, okay, that's something that we can talk about offline as well because I'm actually not. Okay, Lena says, yeah, it is. She's pretty smart, so I'm sure she probably knows. So I guess yes. All right, cool. Let's keep it rolling, guys. Awesome question so far. This is really good. And thanks so much for your contribution, Flips. I think everybody's finding some value in it. So again, guys, what we talked about earlier is, again, same concept with the profit targets, just looking at these previous pivots for a potential place to sell, right? And obviously there's going to be more places to sell based on just overall resistance. This is strictly profit targets based on the pattern alone, right? So important to keep that in mind. Sometimes flips will trade off a candle close, but sometimes just off a wick. Could you distinguish in what situation you would do that in?
Yeah, the wick needs to wick off our support. So look at that breakout. It was a full body breakout out of the top, and then the middle candle is a wick, but it wicked off the second one, the little red one in between. That one is a little wick that wicked off the support, which is the trend line. I'll enter because it wicked off my support.
You're seeing price stay above this close, a little bit of a retest, no strong selling once you get above. Yeah, so this is an example, like these type of retests are an example of where you can now enter on open candles, right? Because you got the closed candle that closed above the trend line, confirming the breakout. Now you can look for wicks down to these support levels below for an ideal entry, right? So this would be a little bit better entries than this close, because on this close here, IV is going to be a little bit higher, meaning your option will cost a little bit more. But after a red day or on this red retest, right, that's when you're going to get a little bit more of a discount on that contract for buying it at the exact same price. So important to keep that in mind as well. There's also some option buying theory that goes into looking for a retest. It's not just looking for a retest, if that makes sense. Cool. So as long as the candle closed over your level, you would then turn to just looking at it, touching your lines and wicking off. Yeah, pretty much. It's either looking for those retests or taking the entry on the close. Do you agree there, Flips?
Yeah, I agree.
Yep. Yeah. That I think Flips and I trade relatively similar. I do think though that Flips is he's a very aggressive day trader, and I'm not as aggressive as he is, which for better or for worse works for both of us in our own ways. But yeah, Flips is just different, bro. He's totally different.
we look, but he just told you we look for many things at once. It's not just that wick. If you guys been listening to the live trading, we look for the wick to close above the pattern. Then we look for level 2s and volume to come, and he's gonna go through that. But level 2 and volume to actually support the buyers coming in around there. We're looking for not big amount of sellers, more buyers than sellers to support a theory that's going to stay above that. We look at dark flow. We make sure that, okay, maybe there's an institution right now that's going to drop a couple mil around here to tell me as well. Exactly. So you look at all these different things because, $1,000 is not going to move NVIDIA, but $3 million might start triggering some buy orders. You start looking at volume. You look at all these things, and then that's when you hear me say, I'm taking NVIDIA calls. I'm taking Apple call or whatever it is, because we're looking for all these different things to match our theory before we enter. It's not just this pattern,
Yep. And that's one really good lesson I got from Shark, who happened to be my mentor and still is. He gave me one great piece of advice, and I dropped this in a few lectures previously, but he always said, look for 5 reasons why you're right. 5 reasons, guys. That's a lot, but Flips just named like 6, right? He's looking at level 2s, flow, dark flow. There's 3, right? A wick off the level, a breakout off the level, right? Volume coming in, right? So you're looking at multiple reasons why you're right. You're looking to build probabilities in your favor as to why you will be right. Not only does it help you make money, but that also helps you build confidence in your trade because you have logical reasons to be in a trade. So if it goes red, but all those reasons are still true, you're not going to sell because you think about all those reasons that you entered and you're like, wow, it's above trend. It retests. There's still buyers, right? All that stuff, which is continuing to back you up. So, I mean, yeah, Flips couldn't have said it better myself there, but yeah, very, very good points all around. Cool. Let's talk about the next pattern. I think, yeah. So this one, I'm going to spend a little bit less time on it. It's pretty similar. This is an ascending triangle. Essentially, what you're looking at here is a resistance level or zone. In this case, you have an uptrend line into this zone, right? And I'm just going to focus on more of the deeper level on this because I think that's what's most important, because this is what's going to help you truly analyze price action, right? Anybody can say, okay, this is an ascending triangle, memorize it. It's like, no, why is this bullish? Why does this matter? So let's unpack this a little bit, right? So first and foremost, we have this resistance zone identified here, right? Clearly there's some sellers present at this zone. So identifying this resistance zone is the first key. Next, notice these higher lows into this resistance zone. What this means to me is that sellers are becoming weaker at this resistance zone, right? And the reason this matters is because there's sellers with limit orders, which you could see on the level 2, parked at this level, right? For whatever reason, this is near 150 on JPM at the time. So this is going to be an important resistance level, right? A nice round number, easy to sell at 150. So we got some sellers parked at 150 after we broke below. But notice how after each and every retest, the sellers get weaker, right? And that's because there's less limit orders. Every time we push these levels, there's less people willing to sell here or less people available to sell here, right? So notice the first breakdown and rejection of 150, we get a really large drop, right? The second time we come back up to 150, the drop decreases in size. The third time we come up to 150, we barely drop, right? And we come up again and we almost put in some kind of tiny double bottom here, but we'll talk about that more later, right? And then finally we break above this 150 level, retest it, and get a nice quick move higher, right? So important to note that there is a deeper level and deeper meaning to each and every one of these patterns, why they matter, right? And there's always a human psychology aspect to each and every one of these patterns. And that's why it matters, right? It doesn't just matter because we draw a line here, draw a box here, boom, that's it, right? I want everybody to understand what it means and why this is the way it is, because this is what will help you grow. This is what will help you identify these other types of patterns that we won't even talk about tonight, but you'll see similar price action, whether it's weakening or strengthening in the bulls or bears favor, and you'll be able to identify it, not necessarily as a pattern, but as a repeatable type. Well, I guess that's a pattern, but something that you see over and over again, right? A pattern, right? So doesn't always have to be, an ascending triangle, a symmetrical triangle, right? Sometimes it's just a pattern that you like to look for, whether it's, maybe it's a W bottom or an M bottom or some other kind of shifted equal lows, right? So many things that go into it. But yeah, anything to add on this one here, Flips? I got a little bit of animations on entries, exits, and stop loss just to hammer that concept home. But anything you have here?
I mean, that's pretty self-explanatory. That just takes, that kind of pattern is something that will play maybe like if I'm thinking of today, that's something that we will play somewhere towards the end of the day in NVIDIA, for example. If you look at NVIDIA,
Flips, you played it today. Watch this.
Yep.
Look familiar? You did. Look at that. So same thing, right? Ascending triangle into a horizontal resistance level. Notice every time we push this level, sellers get weaker, right? Here we get close to this level, we get a nice push down, right? Here we get a little bit of a smaller push down and come back up in the same day. We gap down, which is fine, right? We're still setting a higher low in the larger term. And here, perfect breakout and retest above this level in pre-market. I mean, this is like textbook right here, right? We break above, we retest right at open, and Flips enters long like here. And I'm sitting in the hotel room like I should be trading on my phone right now, but this guy's just yelling and I feel like I'm about to get a noise complaint.
Yeah, we took those Tesla longs, man. That's if you catch Tesla on the right side of things, man. And that's the problem. I try to do some plays for small ports, and then we did a SPY puts and SPY calls same days, cheaper contracts. But then, you got to see this kind of clean patterns, and those are for bigger ports. But yeah,
but you got to take that. Like you can't, you got to take that. So
yeah, that would
take that. I was kicking myself, dude. I was like, all right, like I was going to boot up the computer, but then I didn't. And I was like, I should have done it. And when I just logged onto the computer for lecture, I saw where it closed, and I was like, brutal.
Yeah,
But
that
life
that
goes on.
that contract, I think we sold the last one. I think it was a little bit over like 82 or 83%. And it ran a little bit more, but we were so happy with Tesla paying that kind of profit that yeah.
Yeah, nothing to complain about there, brother. Like seriously, that was perfect. All right. Simon's got a question. Would I enter here on the breakout or retest since the first full body candle closed above the intraday supply zone pretty far away? Very interesting point. Typically, yeah, the slideshow, I got you. This example is also relatively reflective of that. So I'm going to refer to this one just because I can actually like interact with it. But here, for example, this candle right here, if we were able to trade this, closed pretty far above the resistance level, right? I mean, this is like $2 above, which is relatively far, especially for Tesla. It's like 1% or 2 at the level it's currently trading at. So usually I like to wait either for a retest or some kind of consolidation. And if you take a look at the 5-minute, notice this little flag that Tesla created in pre-market, right?
Yeah.
Look at this little flag, right? Something like that, right? So perfect flag from pre-market. This is what I look for, right? Even though we didn't get a retest directly of this level during market hours, there was a nice flag still showing acceptance above the resistance level. And what I mean when I say acceptance is the same thing I was referring to earlier when we see that, okay, previously buyers and sellers were in balance, right? They had us in this range, in this pattern, right? But all of a sudden, buyers take a stand and bring us out of this range. And notice how the price is accepting of being above this area, right? There's no strong push back below this level and close below. It's holding above. It's not setting new lows once it's made it above this level. So this is what I'd like to consider acceptance above a resistance level. Buyers and sellers are now accepting, okay, buyers got the breakout. They're going to do what they're going to do with. Sellers step away a little bit. Buyers push their foot on the gas. And clearly there was a nice move to the upside. And this was literally a setup that took place not much less than 12 hours ago. So these setups repeat themselves day in and day out. Flips is literally trading this type of stuff every day. So if you want real proof that these patterns are repeatable every day, I mean, listen to the guy yell. I mean, he's literally talking about the flag and the cup and handle and everything else. It's like, yeah, just listen to this guy in VC in the mornings and you'll know real quick that these patterns are everywhere. So important to keep that in mind.
Yeah, we use that flag to enter Tesla calls today. That was the key.
I heard. Yep. Don't worry, Flips. Don't worry. I heard. So funny hearing you yell, though. That was hilarious. All right. Kate says, are the gaps also telling of a bullish or bearish push? Seems like the 3 gaps on the example picture are followed by some sort of push. I mean, typically you see, if you see a gap in one direction, typically that shows that momentum is strong in that direction, right? If bulls or bears are able to gap price in one direction, they're typically relatively strong, right? So it's not necessarily 100% success rate, right? But typically, right, that is something that you will notice. Like, for example, just take a look at Tesla, right? Great example of it today. Bulls gapped it up above this resistance level and it ripped, right? So this gap was a sign of strong bullish momentum in this direction. Is that always going to be the case? No, absolutely not. However, it is definitely something that's commonly seen, right? Notice this bear gap down, bear rally, right? Again, bear gap down, bear rally, bear gap down, bear rally, right? So, yeah, but again, sometimes it's not going to work out. Like, for example, I don't know, let's see if for example, here we get a bear gap down and a huge bull rally intraday. Nah, Flips, don't stop screaming. Don't stop screaming until I get a noise complaint at this hotel. Cool. Does that make sense, okay? All right, we're gonna keep rolling.
For some reason, you speak and the volume goes in and out.
Oh, really? Let me.
Yeah, I kind of hear you now. Maybe
give me a second. A little better? Oh, okay. Everybody's saying it's just you, Flips. Fix your mic, Flips.
My mic never works, man.
Yeah, fix your shit, bro. You made a couple thousand today. You made a couple thousand today. Fix it, bro. All right. I'm gonna take a quick break, and I'm just want to assess how the chat is feeling. So far, how are you guys feeling about everything? Are the deeper level concepts making sense? Is Flips and my explanations of things making sense? Is there any big picture questions? Because at this point, the concepts I've planted in your heads. Flips has planted the concepts in your heads. We've indoctrinated you. And now it's just a matter of repeating these concepts over a bunch of different patterns. So I'm going to talk about stop losses and entries, and I'm sure Flips has things to say about that some more as well. But that's really the last big concept that I want to get across. And after this, we're just going to review patterns, review examples for about the last 30 minutes of class. So I just want to check in, make sure everybody's doing okay. And also, I don't know when Flips has to go, but make sure you guys show some love to Flips for being here. Oh, looks like my PowerPoint's going on its own. Make sure you guys show some love to Flips for being here. He literally just chooses to be here. He never tells me when he's going to show up. He just shows up. So make sure you guys show him some love for popping out.
No, I love it though. I honestly try to be in almost in every lecture. It's just sometimes because I have a 4-year-old, I have to be in daddy mode as well.
No, get MMA to be babysitter.
No, but listen, to everybody, we always look for, at least me, 3 or 4 things for a reason to take the trade, and sometimes we enter many trades today. Just the market was on our side, and that's the reason we got all wins, but it doesn't mean that it's going to be like this every single day. Many times we are going to get the breakout that we're looking for, the retest, and then it turns around, it goes the other way. And that's just how the market works. It's a probabilities game. It's not a 100% guarantee way to trade the market. If not, everybody will be doing it.
Facts,
so that's just, we just have to see that probabilities we have more on our side than on the other side. And then number 2, respect your stop loss, because I hear many times like, man, my stop loss hit and then the trade turned around, it went. Fine, if it went again, get back in it. It happened.
I heard you do that today, Flips. Yeah, today.
It happened. I think it was today, right, with AMD?
AMD, yeah. I heard you stop out on AMD, and then I was like, oh, you're long. I was like, wait, you got back in.
Yeah, I got stopped out. So we took AMD longs at the beginning. We made like 12% or 9%. I put a stop loss above entry. It broke below entry. I said, hey, guys, I'm out. And then it turned around, and the support was exactly where we got in last time. So I'm like, it went back up. I said, guys, we're jumping back on AMD. And we took AMD again, and then it just pushed for us. I think it was like 28 to 32% or something like that the second time around. I mean, it just happens that way sometimes, and we just have to agree that we have to respect our stop losses.
Absolutely.
So, but that's just part of the topic.
This is a really interesting question from Raphael. He says, if this was a daily chart, would you use the retest of this breakout as a short opportunity in day trading or scalping? Typically, no. Typically, I don't try to short the breakout unless there's another reason that it makes sense. However, what I do want to mention is notice how we identified this breakout on the hourly time frame, right? So notice this ascending triangle breakout is clearly present on the hourly time frame, right? And then you'll notice that Flips and I zoomed into the 5-minute and then looked further, right? And the reason we typically do this, and I know Flips does this too, is typically we identify setups on the larger time frames or sometimes the smaller time frames and then enter them on the 5 or 15-minute. So I like to identify like daily, weekly, hourly setups, whatever it might be. And then I look to the 5 or the 15-minute to time my entry, right? So I'll look for this little consolidation, right? I'll look for equal lows to be set over the resistance, right? Whatever it might be. Maybe I'll look for this opening range to be broken, right? So a lot of different ways to unpack it. But that's essentially kind of where my thought process is. And I believe that Flips is of a similar mindset. Is there news right now? QQQ and SPY just pumped a bit. Got no idea. I don't have my phone, so I don't have news. Any significant news about yet?
I trade the exact same way. I look for resistance and supports first on the hour and the 4-hour and the 30-minute. I usually start the 4-hour. If there's too far apart from each other, I go to the hourly. And I look for my breakouts on the hourly. If I like it, I zoom into a 30-minute. I look for either a double bottom, like I like today was a double bottom into a flag breakout. I like that kind of pattern. That's a very bullish pattern for me. And then I zoom in at the 5-minute for our entries, so we get the better entry instead of waiting for the whole 30-minute candle to close. You could have
exactly. Exactly. Yeah, you take the risk on the 5-minute candle, and obviously you have your stop loss and go from there. Yeah, that's same as me, Flip. Same as me. Talking about all this trading is making me want to trade tomorrow. I got to make it work with my work schedule. All right. Let's see. Was there one other question? No, I think that was it. Cool. All right, let's keep it rolling. So again, like we talked about earlier, you can enter on this breakout candle. You can look to the lower time frames. If you're looking for a more precise entry, you can enter on the retest. In this case, you could have also entered at the lower trend line, anticipating a breakout. Just want to let you know that's possible, right? Because from these 2 points alone, you could have identified this uptrend, but it would have been a little messy. But I want to let you guys know that this concept is something that you can do, enter while it's still within this pattern at the support, anticipating a breakout with the stop loss below if it happens to break down. So the ascending triangle is more of a typically bullish pattern. But again, guys, nothing is ever 100%. Justin says on the 5-minute, if you entered after the retest, would you have gotten out before the bear flag? What are you referring to? I'm not sure what you're referring to there. While you let me know what you're referring to, I'm going to keep rolling through the rest of this example. So here are some valid entries. Oh, never mind. I thought I had more examples of a profit target and a stop loss. On the Tesla chart, I don't see a bear flag anywhere, personally. This isn't a bull flag, but it's not a bear flag either. It's more of just consolidation.
We played that shit too, that line that used it.
You hit this one?
Yeah, and then the second one after that.
This one?
Yeah. And that's the one that went long as hell.
And then this?
No, I didn't play that one. I was already
ramp into close. Oh, never mind. Yeah. That was too close to close. Yeah. It would have been a sick one though if they ripped it in the close. Justin, you might have to send me a screenshot of what you're referring to as a bear flag. I don't see it. Maybe a really tiny one here, but yeah, on the break of 124. This right here, this bear flag.
You don't trade that as pre-market.
Yeah, this is pre-market, so I wouldn't have traded this no matter what. If this was during market hours, though, I still don't think I would have considered this a bear flag, because if you look at it, right, the context is still bullish. Pre-market, it was in an uptrend the whole time, right? So this, for me, isn't a bear flag until this trend flips, and you can see that this uptrend held the whole way. So not a bear flag for me, but I understand where you're coming from. If it was just this, I might agree with you and say that's a bear flag. But since we have all the context, we know that that's not a bear flag because we're still in an uptrend, and you can't have a bear flag in an uptrend. It's kind of counterintuitive. Do you guys see the 1-minute chart sometimes, or not worth it? I personally haven't looked at the 1-minute chart for much more than a joke in a long time. I don't know about you, Flips. I don't think you look at the one. Yeah, the 1 minute is so quick, so volatile that
I'll go crazy.
Yeah, I'll be going gray in the next 3 years. So, I don't look at the 1 minute, but I will say that a lot of great traders only trade the 1 minute, and that's fine. If it works for you, totally cool. Me personally, though, it's not for me. Not for me. So, like I said, there's so many different trading strategies. There's no one size fits all. Some people trade only the 1 minute. Some people trade only the hourly, or whatever. But that's fine for them as long as it works. So that's an ascending.
You guys gotta. I'm sorry.
No worries.
You guys gotta look at trend. For anybody, 68 people of us here, we need to look at trend. If the trend of Tesla today was bullish through pre-market, and then give me a second.
I'll finish your thought. So Flips is saying, look at the trend, right? And here you can see very clearly that the trend is up in pre-market. We broke a key resistance level right here. So there's 2 reasons to be bullish, right? Then you form a little consolidation, a little bit of a flag here in pre-market. You break out of it at open, right? Typically, I don't trade the first 5-minute candle. So I personally would have missed this trade. I wouldn't have long missed. Typically, I also don't trade the second 5-minute candle. Sometimes I do. In this case, I can't say I would have long this because I didn't. And, for better or for worse, that was the best entry all day. However, I didn't hit that long. But typically, I start to be more prone to trading after the first 15 minutes. I usually wait for about the first 15 minutes. So, yeah, that's kind of why trend is so important. And like Simon says, trend is your friend. If you're not paying attention to the trend, you are doing yourself a severe disservice.
Yeah, not only that, even let's say you don't even look at pre-market, guys. Let's just look at the day. If we turn off pre-market completely, look at the day on spot on not on spot on Tesla today. We just pumped. We went straight up on Tesla. Then anything besides pullbacks, that's what you're looking for is pullbacks, unless it breaks the entire trend on the 5 minute completely. Then you start looking at some put side. But if the trend is bullish, why are you trying to short it? Why are you talking about, oh, it's gonna fake out here and I'm gonna get it? Because then we're just gonna like scalp the bottom when your real trend is bullish. So you gotta wait for the trend line to completely break from being bullish for you to start thinking bearish. Or if it breaks a clear support, then we look at some bearish. But I heard so many people today trying to putting puts on Tesla, but the trend is bullish. Why are you trying to play so much? One candle on the downside. I mean,
the trend is so bullish and it just broke a massive resistance level, and you want to short that? It's like, if you short it, if you're going to short the trend, short at a key resistance level. So I'd be looking for like the weekly, and if I was shorting an uptrend, I mean, really the first very key resistance level to short an uptrend in would be 150 for me. Maybe if we go down to the daily, there's something better, but I mean, really the first key level I'd be looking to short is like 137, and I wouldn't short that right now. I still don't think shorts make sense yet on Tesla. That trade is kind of beaten down at this point. I mean, everybody and their mom, cousin, and grandma is short Tesla, and it just broke that trend.
Yeah. Tomorrow I'm going to be watching for some small pullbacks and to see if we can get a bigger push. Right now I'm just swinging the one runner on Tesla.
Oh, you're swinging Tesla calls?
Yeah, I swing one Tesla call.
Oh, I like that.
And so we'll see. And then I just noticed that SPY in the Qs just did some stupid candle. So
in the after hours or
in the after hours, like literally right now, there was one candle that just pumped as hell, like literally like right now. But anyway, nothing matters. Nothing matters until tomorrow, 9:30 a.m. anyway.
Nope, absolutely. Cool. Let's talk about a few more patterns here. I just want to introduce the rest, but I think from here, everybody mainly has the big idea of any pattern they look at from here on out, right? You know the concepts of entering and exiting. You know the concepts of using confluence and understanding different types of indications in the price are your friend, right? You want multiple reasons to be bullish or bearish on something, understanding what patterns mean, right? So let's continue to talk about some patterns, right? A descending triangle, this is essentially the exact opposite of an ascending triangle, right? Notice you have a horizontal support level. Notice how every time we come down to the support level, the bounce gets smaller, meaning lower highs. That indicates that bulls are becoming weaker and weaker at this level, indicating that this level is decreasing in strength, and we should be looking for a breakdown. So the descending triangle is typically a bearish pattern. Obviously, it can break the other way. In this case, this was bearish. This is when Amazon was pre-split at 3K. But I mean, perfect descending triangle break. You can see how it breaks down, retest the very next candle on the hourly, has one first breakdown. Oh, Flips, you got to go?
Yeah, I got to go. My son I need to put him to bed. It's 10 p.m. here.
Okay, brother. Hey, thank you so much for coming. We appreciate you, and let's have a great day tomorrow.
Yeah, man. Whenever you want to do a lecture like this, just let me know in advance. I'll definitely make some time, and I'll be in here with you.
Sounds like a plan, bro. I'll make sure to hit you up in the future.
Yep. Thank you, guys. Thank you so much.
Have a great rest of your night. See you tomorrow.
All right, brother.
Later. Cool. Make sure to show Flip some love, guys. Again, he just shows up just because, always unannounced. So make sure to show him some love. But again, same concept on the descending triangle. Again, exact opposite as the ascending triangle. Just we're seeing lower highs, weakening price action at this level, indicating that buyers are becoming exhausted, right? There's less people willing to buy at this level. That should begin to skew your sentiment to the downside because we're seeing weakening buyers. You get the breakdown, retest, that's your key to short, right? Same concept. A few ways to define a stop loss, right? You can define a stop loss at this little support that was within the pattern where we saw some previous strong buying, right? Notice this previous strong buying here. And yeah, again, just to reiterate, let's talk about the themes that we've been talking about tonight, right? We've been talking about entering when we reject the trend, right? So for example, when we bounce off resistance or bounce off support, we've talked about entering on a breakout of the trend. We've talked about looking at multiple confluent reasons to be entering any specific trade. Then we've talked about stop losses when the trend is, or when the pattern breakout is no longer valid, right? When price comes back within the trend, when price clears the previous highs or lows, that's when we stop out, when the pattern is no longer valid. And then we have our profit targets based on previous support and resistance. So that's our main themes. Does anybody have any questions before we move into introducing a few more patterns? Yes, this lecture will be posted, but it won't be up tonight. It'll be up in a couple days. SPY forming a descending triangle on the weekly. I don't think so. Where's the video of support and resistance? It's in the beginners lecture tab in the Discord server. This is what I have SPY in on the weekly right now. Technically a symmetrical triangle. You could probably look at it as a descending triangle, maybe if you drew like a horizontal level like that. Are you still going to going over stop losses and how it relates to patterns? Yeah, we're going to continue to talk about that as we talk through more patterns, just to hammer that concept home. Where's the video of support and resistance? Yeah, it's in the beginners tab. Cool, let's keep rolling. I don't want to keep you guys too late, so I'm going to probably go for another 10, 15-ish minutes, and then we'll call it there. But let's introduce some more of these patterns and talk about some profit targets and stop losses. Here is the bullish flag or pennant, two kind of different variations of this. But here you can see what would be regarded as a bull flag, and a few important technicalities to be calling something a bull flag. In my opinion, nothing's a bull flag until it breaks out, right? So before it breaks out, it's just a flag or consolidation. I don't like to attach sentiment to patterns as much as possible. I like to keep that out of it and just say, okay, it's consolidating, it's flagging, whatever. But I try and keep bull and bear out of these things until I have a reason to be really saying that, right? I might think that, but I like to keep the sentiment out of it. So here, really, really nice bull flag. And let's talk about why. So again, we have this beautiful horizontal resistance level from this level that we gapped down to, previously rejected within the day. Later in the day, we break above it and then retest it with a nice, perfect bull flag, right? I mean, this is really, really clean. A few semantics about a bull flag. Typically, you don't want to see the bull flag retrace much more than 30% of the pull. So notice how the flag here kind of has this flag and the pull, which is, I mean, some people draw this out. I don't. And again, you see this flag that doesn't come down to retrace too much more than about 30 to 50% of this flag, which is exactly what you want. If it gets below about 30% or about 50% of this flag, it isn't really a flag anymore. It's starting to just become a reversal. So that's important to note. Another thing to note is you don't really want the consolidation in the flag to have more candles than the actual flag pull. So here you can see the flag pull has about 15-ish, maybe 10 candles, whereas the flag has less than 7 or 8. So that's exactly what you want to see. That's a great ratio where the consolidation is about half as long as the pull. That's not always going to be the case, and that's not a set in stone rule, but just something to keep in mind to have like a textbook flag pattern. If we're looking for profit targets here, right? First things first is have a profit target at the previous high of day, right? Or any pivot within the flag. So this could be a little profit target right here, this rejection here. This rejection at the top of the flag would be a nice profit target to have, right? And stop loss, there's multiple ways to define the stop loss on this specific trade. It's relatively easy on this one because this flagged above a support and right back into it. So the stop loss for me on this trade would be right below this support level, right? Because this should be a strong support level once we break above it, because clearly it was strong resistance after we started the day. It was the previous high of day, which is always going to be a significant level. So this should be important here. Right, so we break above this critical level, come back, retest it. Really easy to just have your stop right here on a new low, right below this candle here. So that's how I would define my stop here. Profit target would be the top of this flag. What also is the previous day's close, really close to it. So that should be a critical level for multiple reasons. And then again, the rest of the profit targets are not drawn out here, but these would just be determined from normal support and resistance, right? Not necessarily looking at this pattern in specific, but you should have some levels from the daily chart or the weekly chart that would help you determine other good places to sell up above. Does that make sense? YD says, how important is volume on these flag patterns? On any type of consolidation pattern, I typically want to see volume decrease as we consolidate. So in this case, we didn't really have a significant decrease in volume within this flag, which isn't always a red flag to me. But typically, I like to see volume drop off as we continue to consolidate because typically that means that one side is becoming weaker, right? Whether it's sellers slowing down, right, or buyers slowing down. Typically, when we see a drop off in volume, when we're seeing some kind of consolidation, it shows that one side or both sides are weakening, or they're accepting the current move in price and awaiting the next move, right? So for example, once you see this breakout, you begin to see volume pick up. That's exactly what you want to see, right? You want to see a volume-backed breakout. You want to see this candle break higher on this breakout, or break higher on higher volume. And that's what you're looking for confirmation volume-wise, is that increase in volume as you break higher. If we take a look at Tesla, it's kind of hard to note the volume that came in on this specific pattern, just because volume on Tesla has been record high recently. But I mean, it's hard because this isn't really a valid reference considering it's right at open. But just take note of the significant volume relative to the average of the day, right? We can just take a look at that, right? So notice how high volume was for really the first hour or two while we made this breakout and move higher, which is showing that there's bulls supporting this move higher. And as we create this consolidation, which isn't a flag, but looks similar, so we'll treat it as such, right? As we created this consolidation, we get a nice drop off in volume, right? And we start to get an increase in relative volume as we break out of this consolidation, right? Which is what we want to see. But again, if you refer back to the volume lecture, you'll know that there's typical patterns that volume follows throughout the day. So really through midday, there's almost always lower volume. So you really have to be analyzing volume to the previous couple candles. Like for example, these two candles here are on almost double the volume of the average, but the average at this time of day is so low, right? The average is about 1 million, but these two candles were on 2 million, right? So it's very high volume for this time of day, but overall during the day, it's low because, it started the day off at 5 million. So important to note that volume is a relative analysis, but we go in depth on that in the volume lecture. So I would refer you to that if you're looking for more information in that respect. So that's looking at a bull flag there. Again, I have the bull pennant image here. It's really similar to the flag, so I don't have an example built out for it, but it's essentially a flagpole really and just a symmetrical triangle. So same concept there. Bear flag is going to be the exact opposite. Notice how this flag is a little bit longer. So a little bit longer consolidation than I typically like, but I thought it was cool because it was on the exact same stock, just the opposite move. So same concept here, right? You get an aggressive move to the downside. You want to see some kind of consolidation in this sort of channel, right? You can see barely below that volume dropped off as we traded within this channel. And then we got that move lower. So not going to spend too much time on the bear flag. It's really just the exact opposite of the bull flag. Same exact concept, really just inverted. So we're going to talk about a quick question here. So I want you guys to answer in the chat what this pattern is and if it's bullish or bearish. An extra credit would be when would you enter or a stop loss. So let's get right into it. Let's see what we got. What is this pattern? Is it bullish or bearish? And when would you enter and where would you have a stop loss? What do you guys think? What do we have here? Drop some answers in the chat, okay? We got some people saying bullish. Make sure you say what type of pattern it is too. I'll give you guys a hint in a second. Okay, we got some people saying bull flag. Let's see if anybody wants to talk about entries and exits. Entries and exits, what do you guys think? I'll give it to you. Yeah, it's a bull flag. You guys got it right. But let's think about some entries and exits, right? They might not be shown on the chart, but just think about it, right? Where would your stop loss be? Where would your entry be on this? On the break of the trend line, break and retest. Trend line at the top wicks. Enter when the trend line breaks up top. Stop loss on the bottom of the big green candle. Bull flag on the retest. Yeah, I completely agree with everybody. I would probably have my stop loss below this low right here, and I'd probably be entering on this breakout, right? Very, very simple. So happy with everybody's answers there. Let's keep it moving. I want to try and get through the rest of these patterns before we wrap up. So head and shoulders, relatively complex pattern because it can take a little bit more time to form. But essentially with the head and shoulders, I guess it's a little bit simple, but essentially you're looking for this kind of formation to take shape where you have two shoulders, which are formed at equal highs, and a head, which is formed at the highest high. So essentially this is just showing that weakening price action, right? And somebody has mentioned volume being higher in the first shoulder and lower in the second shoulder as kind of a volume pattern to watch out for. I typically don't look into it in that respect, but that's something to kind of look into your own study if you're really interested in this specific pattern. I do like head and shoulders patterns, but it's not something that I trade day in and day out, so we won't spend too much time on it. I just want to kind of introduce it to you, let you know that it exists. It kind of has this rounding sort of formation on each head and shoulder, right? A little bit of rounding price action. And I think the inverse head and shoulders example is a little bit better. So I want to just refer to that really quick. And the head and shoulders are more bearish patterns. And just to talk about entries and exits really quick, this neckline here is going to be your strong support. So you'd be looking to enter short on the break below this neckline. Another place that I see people typically trying to enter head and shoulders is anticipating the second shoulder to form. So they might see this first shoulder and first head form, and then they see this kind of drop form and a bounce begin. I also see some people anticipating this head and shoulders forming and try and take a short at this level. And I'll actually refer to this specific chart, which is the inverse head and shoulders. That is actually a trade that I actually took on this inverse head and shoulders. So this was a really big gap down day on SPY a few months ago. And I noticed this shoulder here forming, this head forming down here. We came up and retested the neckline and began falling back down. And I don't know if this trade floor play still exists, but I talked about this in trade floor, and I was looking for the shoulder to form right at this level. I was looking for support to be developed right here because it was looking like a head and shoulders was forming. So I ended up longing right here. And unfortunately I sold here. Obviously it continued a lot higher after that, but I sold it at the neckline, and yeah, it ripped another couple bucks, but life goes on, not the end of the world. Raphael says, could the neckline be a trend, or it needs to be a horizontal line? To be a true head and shoulders, it needs to be a horizontal line. Horizontal line for the head and shoulders. Some people look at head and shoulders on diagonal lines, but I mean, technically it's not head and shoulders. If you refer to the textbooks, it's not a head and shoulders if it's on a horizontal line or on a trend line. Some people still trade them other ways. Again, it's whatever works for you, but I have to teach based on what's actually necessarily the definition of the head and shoulders, which is going to be a horizontal line. So up to your interpretation. If you want to use trend lines, all good if you do, all good if you don't. But yeah, this is the inverse head and shoulders. Again, just bigger picture talking about it here. This is just showing a reversal, right? So here we have our initial low. We set a lower low. We come back up to our previous high and set a higher low, right? So this is essentially just a price action reversal. We have a downtrend here, an uptrend forms, we set a higher low, and boom, our reversal is set in place. Opposite with the head and shoulders, right? Again, oops, that's cup and handle. We have our high first here. We have our low here. Then we set a higher high here. So that's an uptrend, right? Lower highs or higher highs and higher lows. We come back down, set an equal low at this previous low, and then set a lower high, which is our first indication that a reversal might be taking place. So again, right, the head and shoulders is more about just analyzing trend, right? Looking at if a higher low is forming, if a lower high is forming, right? If a higher low or if a higher high is forming, right? It's essentially just analyzing trend and wrapping that up into the name of head and shoulders. But really, again, just to reiterate, I think this is a really clean example. Just take a look at these arrows, right? This first arrow is our initial low. The second arrow is our lower low. And this third arrow is our higher low. So it looked as though we had a downtrend. We reversed that trend and began an uptrend, right? That's the definition of a trend, is a higher low, right? Or a lower low, right? Basic definitions of trend. It's just wrapped up within this pattern. Let's talk a little bit about a cup and handle. This is what Flips was referring to as a pattern that he really likes. Cup and handles are really interesting. I want to just talk about a few caveats with them instead of just saying exactly what we see on the screen, because I know everybody can read. So a few things to keep in mind. Usually when you see, or when you're looking for a cup and handle pattern such as this, you want to see an aggressive move on each side of the cup, right? So you can see here, really aggressive move down and a really aggressive move to the upside, right? Very rapid moves up and down. Next, you want to see high volume on these moves to the upside and to the downside. And also it helps to see spikes in volume in these in this consolidation at the bottom, right? Because spikes in volume, random spikes in volume show accumulation, right? So if you see this big green candle on high volume, that shows that people are buying down at these lows, which is what you want to see, right? You want to see people buying at these lows. So you'd be looking for large volume spikes at the lows of these cups, right? So again, aggressive move to the downside and the upside, right? You want to see that quick move up and down. And then you want to see some accumulation volume at these lows, right? You want to see large spikes of volume indicating that people are buying up shares at these lows, which is what you want to see, right? You want people to be getting long here. And then next, the handle is really just a bull flag pretty much. And you can trade this just like a bull flag, right? You get the breakout here, retest, that's where you'd go long, right? Relatively simple there. And there's also an inverse cup and handle similar to the inverse cup and shoulder or inverse head and shoulders. It's just this cup flipped mirrored vertically. So relatively simple there. Just kind of a cup and handle. And again, same rule as the bull flag. You don't want to see this handle retrace too much more than 30 to 50% of this cup. At that point, it is no longer really a bullish pattern, and it becomes more of a reversal, right? So important to keep that in mind. I think these are the last two patterns. I just want to mention them really quickly. Falling and rising wedge, again, really just two trends, right? Not too much to unpack. Really what you're just seeing is a consolidation and trading activity, right? So notice how the difference between the highs and the lows just becomes tighter and tighter. And that shows, although sellers are setting new lows, they're becoming weaker, right? And it's the exact opposite in the rising wedge. Although sellers or buyers are setting new highs, they're becoming weaker, right? And that's what you're seeing in these wedge type patterns is you're just looking at weakening in the direction of the trend, right? So this falling wedge, you're seeing sellers become weaker. Rising wedge, you're seeing buyers become weaker. And that's why they're more bullish or bearish patterns. So a falling wedge is going to be more bullish. A rising wedge is going to be more bearish. Again, hopefully this one is a little bit self-explanatory, not too much of a complicated one. Just wanted to kind of instill that deeper level. And again, same thing with all of our patterns. We can look for a support to enter on. We can look to enter on this breakout and retest, right? So multiple ways to go about it. But yeah, let's see. I don't remember what this question is. Let's see. Let's try and do this question. I think maybe it'll be a little bit more hard because I blew through everything really quick, but let's see. So same thing as last time. What is this pattern and is it bullish or bearish? And same thing, extra credit, when would you enter and what would your stop loss be? This is going to be the last thing that we wrap up with tonight. So let's take a look. Oh, this one's a little bit of a harder one. Actually, this is a newer example. So let's see. I should have removed this stuff. Yeah, a little bit of a harder one actually, but what is this pattern and is it bullish or bearish? I'm really mainly looking in this area right here. Name the pattern. Is it bullish, bearish? When would you enter? Where would you set your stop loss? If you need, take your time on this one. I'm seeing some things I like, even though I blew through it really quickly. Seems like we're getting an understanding. Let's get some more answers. Let's get some more answers here. Drop some answers, even if it's a complete guess. If you have no idea, let's see an answer. Let's see an answer on stop loss, all that good stuff. Let's see what you guys got. Stop loss at the lows. I like that. You don't know. That's fine. Bull wedge. All right, let's take a look. Check this out. So the answer that I chose here is a falling wedge, which is going to be a bullish pattern. And notice how, again, just like the previous example, you have that consolidating price action. And actually, this is a pattern that is taking place right now. So if we take a look at Amazon Weekly, the reason that I added this one in is I wanted to help everybody start their analysis of patterns by giving them a trade idea to look out for to start the week, right? So check this out. This is Amazon Weekly right here. If I draw out this trend line again, notice nice falling wedge right here. We got the nice volume back breakout. And right now we're actually coming down for a retest. So I'm going to be looking to these lower levels of support to potentially go long. And that's what I'm going to continue to have my eyes on is just look for some of these levels to act as support. If I take a look at the hourly, we can draw in this hourly uptrend, something like this, where it's sitting right on top of, it looks like it broke below in the after hour. So not a good sign for the setup so far, but something to keep in mind, right? Still overall, even though we're not obeying the support line, we still would be setting a higher low, right? Again, if this is our low, this area is still technically a higher low. So not too much to wave the alarm flags at just yet. But yeah, I thought this example was really cool. This was a pretty clean falling wedge example. One thing that I really wanted to note here is notice how volume picks up at these lows. This, after looking at the candlesticks, you can see how we're not getting strong bearish momentum down at these lows. So this volume has to be buyers, right? These candles, none of these candles are very strongly bearish except this one, right? And we got really high volume on this candle, but these two candles, volume is still high, yet there isn't too much bearishness going on here, right? So that's essentially what you're looking to see, buyers beginning to step in more significance, right? So that's what I wanted to outline really briefly. I think with that, that really brings us to the end of the lecture. We talked a lot about trade ideas and talking about entries and exits. In the next few classes, we'll continue to develop these ideas, looking at trade ideas based on multiple forms of confluence, including patterns, trends, support and resistance, indicators, price action, volume, flow, maybe even level twos. So that brings us to the end of the content for tonight. Look out for the rest of this lecture series to continue forward. We're going to continue to make this even more advanced. So now we've really covered most of the basics. This is really the end of the basics. And at this point, we're going to begin to combine everything together. And I know we've given a little bit of hints of kind of combining things and mixing things together, but now it's going to be really detailed lectures on combining patterns, trends, support resistance, developing trading plans, understanding portfolio balancing, stop losses, all that good stuff. So here's where we begin to kick up the heat. It's going to get more and more complicated, but this is where the information becomes even more useful when it all comes together. So I'm just going to address a few of these questions before I say goodnight. Yeah, DM me that video, Kate. I'll check that one out so we can talk about that. But yeah, I just want to thank everybody so much for attending live. I apologize if you guys noticed any differences in the lecture quality this evening. I'm in a hotel, so the Wi-Fi might not be as good, the audio might not be as good, but hopefully it was good enough and met everybody's standards. Again, show some love to Flips for stopping out. He really doesn't have to, he just does, and I'll do my best to coordinate with him in the future so we can get him to spread some more knowledge. And again, guys, thank you all so much for attending. I hope you guys have a great rest of your evening. And yeah, so happy to have you guys all here. Again, it's truly a blessing and an honor to be in this position with you all. I never take it for granted. And yeah, I hope you guys really, truly are finding value in these courses. If there's any way that I can improve, make them more valuable for you all, make your time more useful in these classes, please tell me. I cannot make changes if you don't tell me what you want changed. So please reach out and let me know if you want anything changed. And I'll be very happy to respond to any feedback, positive or negative. Just don't be too mean. Just kidding. Lay it all on me. If there's any way I can make this more valuable, please let me know, because I truly want to provide as much value for everybody in here as possible. But that's my rant. Thank you again, everybody, so much for attending. I hope you guys all have a great rest of your night. And I hope to see you all in the very next lecture next week. I think it'll be on Monday. So yeah, everybody, thank you all so much. Hope you guys have a great rest of your night, and I will talk to you all soon. See you all on the trade floor. Adios, everybody. Have a great night.